You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Tuesday, October 2nd, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from Investing.com. It's the top 5 things to know in the market on Tuesday. First thing to know is Italy's political woes continue. Investor concerns over Italy continued on Tuesday after Claudio Borghi, head of the lower house's budget committee, said Italy would have solved its fiscal problems with its own currency. His comments prompted the 10-year Italian bond to rise to 3.41%, the highest level since March 2014, prompting a worry of a spillover effect into other European sectors. Last week, Italy's government announced a budget deficit that would increase spending and cut taxes, but would raise the debt limit in breach of European Union budget rules. The European Commission is expected to reject Italy's budget plans. And EU officials have warned its plan to borrow billions of extra euros to fund spending pledges could tip the bloc back into crisis. Deputy Prime Minister Luigi Di Maio said Italy would not change its budget deficit targets. The second thing to know today is U.S. crude prices hit a 4-year high. U.S. oil prices hit their highest level since November 2014 amid fears over a looming supply crunch once U.S. sanctions are reimposed on Iran next month. U.S. crude prices hit a record high of $75.91 a barrel and were last trading at $75.30 after rallying 2.76% in the previous session. London-based Brent crude futures were down 0.46% to $84.62 a barrel, pulling away from an overnight high of $85.33 a barrel, which was also a 4-year peak. The third thing to note today is U.S. futures pointed to a lower open on Wall Street before the open. U.S. futures were lower on Tuesday as optimism over a reworked U.S.-Canada trade deal faded and Italy's budget crisis spooked investors. Fourth thing to note today is Federal Reserve Chairman Jeremy Powell is to speak. Fed Chairman Jeremy Powell is expected to speak at 12 p.m. Eastern Time at the 60th National Association for Business Economics annual meeting in Boston. The speech comes just a week after Powell's press conference in the wake of what was the Fed's third rate hike of this year. Still, investors watch closely for any clues concerning a further rate hike in December. Traders are pricing in a 78.5% chance of another rate increase before the end of the year, according to Investment.com's Fed Rate Monitor tool. And the fifth thing to note today is the euro hits a 5-month low on Italy budget worries. The euro extended early losses against the dollar, falling to its lowest level in more than a month, with the euro USD down 0.5% to 1.1519. Risk-off sentiment in markets boosted the dollar, yen, and the Swissy. The single currency plummeted almost 2 month lows against the yen, with the euro Japanese yen down 0.58% to 131.14. Our second story today is from investing.com. Too much oil, Texas boom outpaces supply and transport networks. The West Texas drillers that drove the shale revolution have overwhelmed the region's infrastructure with oil production, driving up costs and depressing regional oil prices and slowing the pace of growth. The U.S. government continues to forecast the country's oil output rising to a fresh record. But competition for limited resources in Texas is making it harder for shale producers to turn a profit and encouraging some to invest elsewhere. Texas is home to the Permian Basin, the largest U.S. oil field and the center of the country's shale industry. In the past 3 years, production from the Permian has risen a whopping 1.5 million barrels per day to 3.43 million barrels per day. Our third story today is from CMEgroup.com. CME Group and NASDAQ extend exclusive NASDAQ 100 futures license through 2029. CME Group and NASDAQ today announced a 10-year extension of CME Group's exclusive license to offer futures and options on futures based on the NASDAQ 100 and other NASDAQ indexes through 2029. As the world's leading and most diverse derivatives marketplace, CME Group operates the largest equity index futures complex in the world. NASDAQ is the leading global provider of trading, clearing, exchange technology, listing information, and public company services. Our next story today is also from investing.com. Japan car makers welcome North America trade deal, but U.S. export curbs are a risk. Toyota, Nissan, and Mazda welcomed on Tuesday the revised North America trade deal that left Japanese automakers unscathed, but they may face a bumpy ride when Washington and Tokyo hold new talks over $40 billion of annual U.S. auto imports from Japan. The United States and Canada reached an agreement on Sunday to update the 1994 North American Free Trade Agreement, after Washington had forged a separate trade deal with Mexico in August. The updated deal effectively maintains the auto industry's current footprint in North America and spares Canada and Mexico from the prospect of U.S. national security tariffs on vehicles. Mazda Motor Corp, which ships cars to the United States from Mexico and Japan, called the deal a big step forward. Nissan Motor Corp, which makes the cars it sells in the United States locally, as well as in Mexico, Japan, and other countries, said it was encouraged by the agreement. And that, ladies and gentlemen, is news you can use for today, Tuesday, October 2nd, 2018, your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a nice day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.